everyone, this is Vishal from EQUITY.GURU, and we're going to be talking about energy. If you follow the oil markets, if you follow natural gas, heck, if you even follow uranium, the energy space is having quite the pop right now. I just want to remind you all, and you can watch, a previous chart attack video. We were talking about that breakout in oil way back down here when we finally took out that $74 zone and then took out these recent highs back at 77. That's when I warned you guys that the trend has shifted. You went from a nice, downtrend here. Oil was just ranging here for a couple of months, nothing really happening. Even during most of summer when you get that seasonality play when people are driving and you're expecting them to, be consuming more gas. That, of course, got a bit tested because a lot of people thought the economy was going to slow down, etc. And now people are looking at this breakout as, okay, maybe there's not going to be a slowdown or a recession. However, it seems like it's more to do with, price sort of production cuts that Russia and Saudi Arabia have extended. But again, folks, this news came out after, it came out on the 5th of September. So it came out after this large move. And I just think personally that you just have a trend shift on the technicals here. And now you're in an uptrend. And I think there's still more room for oil to go. Oil did consolidate a little bit in this flag pattern, which I have drawn out. We got that breakout on August 29th. We also took out these lower highs here around 81. And I'm looking at West Texas here, by the way. We'll look at Brent crude in just a second. But this little move downwards just turned out to be a small little correction. You have your one leg down in an overall uptrend. And now we are testing previous highs around 88. Previous highs, I mean highs from yesterday, recent highs, let's call it. And if we break above that, it does look like $90 and above. Oil is coming back. And I think, the geopolitics side is quite interesting. Of course, Russia and Saudi Arabia are both a part of OPEC plus. A lot of people have been talking about the U.S., depleting their emergency reserves to try to bring the price of oil down. And I think a lot of you guys recall that was happening here. And then the Saudis responded with a production cut, trying to bring the price up higher. And a lot of people in the West sort of saying, hey, why are our Saudi allies doing this? Of course, the West is trying to do this to try to tame those inflation numbers, and that's a whole topic that we'll talk about in just a second as well. But I think it's interesting that last week we found out that the Saudis are actually going to be a new member of BRICS. They're one of the 6 new countries that have been admitted into the BRICS alliance, so I guess we're going to be calling it BRICS Plus in 2024, and those countries are Saudi Arabia, Iran, Ethiopia, the United Arab Emirates, Egypt, and Argentina. So, quite interesting timing with this extension of production cuts. And that production cut, it is 1 million barrels per day for the Saudis until the end of the year. And the Russians announcing they would extend their export cuts of 300,000 barrels per day for the same period. And both nations are arguing or claiming that this is to maintain the stability and balance in the oil markets, but of course, many are seeing it as a drive to push oil prices higher. So next targets, like I said, 90 plus, I think, is what I'm watching. I'm watching this sort of 93 zone. A lot of people are also watching the big psychological $100 zone for West Texas. But the uptrend, it's in play, no doubt about it. If we do close back, I would say below the 77 level, that's when I would sort of nullify any further uptrend in oil. You look at Brent crude, very similar chart. We just broke above recent highs here at 87.50, and Brent crude is actually above that $90 barrel level as well. But the same technicals, same market structure is being seen here on oil, and that is spooking the markets a little bit, right? Because of course, if oil starts to, go higher, that's going to increase the transportation costs and energy costs and goods and services. Any goods that are being transported in trucks, etc. The energy costs will rise, and businesses will most likely pass that extra cost to the consumer, which translates to rising prices, which leads to inflation. So a lot of people are worried that we've been seeing inflation tick lower, but a lot of people are now worried that with higher oil prices, we may see a little surprise upside now in those inflation data that's coming down the road and into the future, which means that central banks are going to remain hawkish. And we've heard from the Bank of Canada today. They didn't raise rates, but they did say that they are open to raising interest rates if that inflation data begins to turn around, right? So that's why a lot of people are worried about this rise in oil, and it looks like, judging by the market response we are seeing today, a lot of people are maybe beginning to price in a September rate hike from the Federal Reserve as oil prices begin to rise. A couple other things we can look at when oil begins to rise. I do look at the Canadian dollar or the Canadian loonie because it does tend to have a positive correlation with oil as well. So when oil rises, the Canadian loonie strengthens. You can see here that's not really the case with the U.S. dollar gaining against the CAD. So again, folks, these correlations not always 100%, right? But I think you have to look at the broader market, and we are seeing this move into the U.S. dollar and into cash as we see sort of an everything sell-off, a pan sell-off right now in stock markets, in bond markets, in crypto, and in certain commodities as well. So the dollar here looks like it's going to be gaining. And one little surprise chart as well, because we are talking about energy, and I think it's something not too many people are talking about, but it is natural gas. Again, natural gas hasn't really been doing much since February. Seasonality-wise, weather's warmer, there's not really much demand for it, but we are about to enter fall in a few weeks. And I just saw an article here in Canada that they're expecting a colder winter this year. But I think a lot of eyes are going to be on Europe, and a lot of people were worried that Europe was going to see some energy issues and some natural gas issues, but they had one of the warmest winters on record last year. So will that repeat itself this year? Not sure, but I think seasonality-wise and technical-wise, sorry, the setup on natural gas might be ready to go. If we do close below like 250 here on natural gas, I would say that any upside pop is going to be invalidated here, but it does look like we're just creating this ugly-looking inverse head and shoulder. Some might even say a cup and handle pattern. $3 is that breakout zone, and if you break above that and close above that, I think you can easily move up to back to the $5 level. Not anytime soon, but I'm just saying, that would be like a longer term or medium term target. And just a bit of caution, of course, natural gas is known as that widowmaker commodity because when it moves, and it's very, very volatile. So I think if you do get that breakout above 3, the following day you will see quite substantial momentum follow through. But again, it can work to the downside as well, right? So if the sellers do jump back in to bring the prices down, it can move quite a lot. And you've seen videos, and heck, you've even seen hedge funds that have blown up because they made a wrong bet on natural gas. So, not maybe for beginner traders and investors to play the natural gas futures. Of course, you can always just bet on natural gas by buying oil and gas stocks, traded on the TSX or on the U.S. markets, because longer term and medium term, both charts of natural gas and oil look quite bullish. But I'm just showing you guys from a CFD futures contract perspective here. But that's the theme right now. Oil markets, very, very strong rise. I mean, we have multiple days of green. We actually had a bit of a stall day, but that doesn't really count because the oil markets were trading during Labor Day. So I guess, when oil markets were open and the regular liquidity was there in the market, we had multiple green days in a row. and the uptrend is strong, and it looks like we are going to hit that $90 zone to 92.50, which I have as a resistance zone. But the bigger theme going forward is, will higher oil prices translate to a surprise uptick in inflation? And does that mean that central banks will remain hawkish and possibly raise rates further? And of course, that will mean that the markets, the stock markets, will have to price all that in, which we could be seeing now, which could be resulting in why the stock markets are selling off. But that's it for me, folks. If you enjoyed the video, give it a thumbs up. Be sure to subscribe and let me know in the comments below where you guys think the price of oil is going. And I'll catch you guys all in the next chart attack.